Hello, financial investors, and welcome to the channel. My name is Brent, and today we are going to be doing our Monday buys video, going over what stocks we are planning on buying here on the 2nd of March 2020. We're going to take a look at Friday. Up on the board now, the Dow Jones, Nasdaq, and the S&P 500 started to increase towards the end of the day, meaning that it could have found like a bottom and could be potentially bouncing back. But what we're going to be doing is taking today as an opportunity to see what stocks moved in the last week and if there's anything new that recently fell into the negative that could offer a good reinvesting opportunity, just kind of buying low and holding for the long term. So, with that said, if you are brand new to the channel, have not yet subscribed. I would really appreciate it if you do hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, just fun, hit that thumbs up. And if you have any comments or questions going over this video, the stock market dividends, what are you buying? What's going on in your head? Are you investing or pulling money out? Let me know in that comment section. I do read and reply to all your comments, and let's go ahead and get into the video. So up on the screen right now, I have finviz.com. Great website. I mainly use it for their heat map, but this kind of shows what was kind of going on a hourly, and I believe this is every 10 minutes or so, but you can see towards the end of the day, it doesn't show the volume here, but if we were to look at some other graphs that showed volume, there was a lot of volume here towards the end of the day on Friday, which began to increase the S&P, the Nasdaq, and the Dow Jones by quite a bit, basically erasing that day's loss. But for the most part, it still ended pretty down, 1.39% for the Dow, S&P down 0.82, and the Nasdaq was basically flat on the day. Now, how are we looking going into Friday? Right now, it's almost midnight here on Sunday going into Monday. So right now, Asia markets were opened up earlier. They are closed now. China is currently open. They are up for the day. We just saw that bounce from the 0.5s to now 0.68. So the market is showing some signs of recovery after the rapid loss last week. We lost thousands of points in the Dow Jones, over 10% across the indexes. While the fundamentals in the future could potentially change and be unknown, it does seem like the market could be having some sort of recovery. And as long as we're investing for the long term, say 5, 10, 30 years or more out, whatever happens today, this week, this month, or this year, anything after 2 years will generally just be kind of forgotten. You won't even remember this day a couple years from now. So what we're looking for is positions that recently changed and could potentially offer a buying opportunity. So what we want to go ahead and kind of go over first is how much cash we have on hand. So tomorrow I have $127.56 in this account that I will be investing into a few positions. I've been looking at either one or maybe splitting up into two or three, but we'll kind of go over what took place last week as far as what positions were up and what positions were down. So we are going to be investing the full 127.56, and a few other accounts I have begun to dump capital into them. I have a full $5,400 going into my own Roth IRA over on M1 Finance in my account, and that's just going to get auto invested into an ETF. I don't really watch that account or really track it. It only follows one ETF and just kind of reinvests into itself. So I'm just going to go ahead and max out that account, and then I'll be doing another $6,000 for 2020, and then I'm going to leave this one as a weekly deposit of $115.38, and that should max out mine and my wife's Roth IRA for 2020. But I am moving capital in. I'm not going to be fully investing for 2020, but I'm going to go ahead and fully invest the 2019 capital of $5,400 because I did put 600 and some into an IRA last year, so I can only put 6,000 between them. So I kind of had to split that up. So let's go take a look at the weekly performance. So as far as positions, some of our best performers last week was Clorox, Waco Group, and 3M. So these were some of the ones that have been beat up a lot recently. Clorox, while it actually hasn't been beat up too much, I know Waco Group has been beat up, trading near 52-week lows. 3M is trading actually below 150 from the position I saw the other day. Yeah, it's at 149.24. I saw a lot of coworkers talking about their 3M masks and also potentially going out and buying 3M just because they think that recoveries going to be really nice for them in the future in the upcoming quarters as people are going out and buying the masks. But we'll kind of see. Now, some of the fastest fallers last week, as we kind of scroll down here towards the bottom, Eaton Vance lost 18.10%. Now, Eaton Vance was a financial I added to my portfolio at a good portion ago, but I just did not get the capital that I wanted in that position high enough. It's at $168. That's a dividend aristocrat. I would really like to have this one around $800, $900. So I may potentially deposit a sizable upfront chunk to kind of get all these positions into the 800, 900 portion, and then from that point on, any remaining funds will just kind of get dripped and invested on a weekly basis going in, but we'll kind of play it out. I think we have a lot of buying opportunities today here on Monday versus what we had a couple months ago and even a year ago in a lot of these positions. So I like this, being able to get new opportunities in the portfolio. And even though I only have $6,000 to invest per year, of course, next year I'll have to kind of wait a little bit, but I do have the dividend supply kind of dripping in now on a weekly basis. So every month I get roughly $50 to $70 of dividends, and it's only going to increase as I reinvest and deposit more capital into this portfolio. Okay, so what positions am I interested in? Well, I will go ahead and go over to my spreadsheet for that. So really quickly, this is the live data. I recently submitted my February one. In February, this portfolio generated $71.26 of paid dividends. These were all paid from ABM, AT&C, CVS Corp, General Mills, Lowe's, Apple, Main Street Capital, Tanger Factory Outlet, Avi, Clorox, Eaton Vance, Caterpillar, and Simon Property Group. Simon Property Group, I didn't record it in my last video because it recently just came in, $12.18. So total a whopping $71.26. That is probably the biggest dividend payout from the M1 Finance account in a single month. So very, very nice there. I do like the dividends kind of beginning to kind of come in. And this portfolio has been active for the past 2 years now. So after 2 years, I'm now earning about $60, $70 per month in annual income. I just got a dividend increase here from Essex Property Trust. So if you jump over to Seeking Alpha, this is something I just kind of saw. I never chalked out this article, but the way here that I had this spreadsheet kind of set up, it pulls from other websites the new dividend. So all I have to do in here is go ahead and punch that in. It updates my current dividend, and you can see that the dividend yield here went from 275, 317 to 337. That's 293. My yield is 3.37, so I have a very high starting yield for Essex Property Trust, and its current starting yield is 2.93. So there we go. Pretty good little chunk there, almost a quarter increase here to the dividend. You can see how the yield on cost begins to increase on a yearly basis as these companies raise their dividends. Some of these companies here, such as JPM or Cardinal Health, is offering a 4.03% my own yield versus the current yield of 3.68% that it's offering. So as we begin to see this portfolio build up, there'll be positions that have yield on costs of 7, 8, 9% into the future just because of them continuously increasing their dividends on a yearly basis. So my total dividend income from today's date going forward is $776.41. I believe by the end of 2020, I will have received over $1,000 of dividends from maybe this account. We'll see how this kind of plays out in the future. I would like to do a bigger deposit just to get that dividend income over $1,000 in this account. But between all my accounts, I know I get over $1,000 of dividend income, which is really nice. So the positions that recently fell into the negative: Johnson & Johnson, Eaton Vance, McDonald's, Main Street Capital, and Cisco and Pfizer. Those are the positions that recently fell into the negative that I have not been able to invest in for quite a while. So I'm going to go ahead and highlight these here. Oh, Stanley Black & Decker is not one that's currently negative in the portfolio. I don't know if I can deselect that. I can deselect every single one. Oh, there we go. Okay. So of these positions that are currently highlighted, I don't care that they are not going ex-dividend here in March. What I do care about is that they recently went negative. These companies are very strong. When you think of Johnson and Johnson, it's just a very strong consumer brand company. Eaton Vance, I don't think it's very well known as a financial, but it's also a very strong dividend aristocrat with 38 years of growing and paying out dividends. It's a financial company that grew and paid out dividends during the financial crisis, and they currently pay out $1.50 per share and have a payout ratio of around 43%. So they're very safe there. McDonald's, obviously, very strong brand there. Real estate and consumer food. I don't know how. I think they would be consumer restaurant branded. They are down 2.49% in the portfolio. This is one that I started to invest in here, $51, but then they shot up so fast. Recently, McDonald's, they had a pullback in this last week, almost losing 10% with the market and putting them into the negative finally in my portfolio. So I really want to take advantage of McDonald's at this time too. That's why I wish I had more capital in this account. You'll probably see me dump more capital in this account sometime during this week and just buy more of these positions up that are kind of weak here in the short term. I don't care if they fall into the future. I have dividend income that's coming on in a continuous basis that I'll be able to average down into them. And of course, if they do happen to fall, that's fine. I'm not investing here for the short term. I think of these companies in the long term where they will be at. These are just very profitable companies. They have a good moat around them, brand, and a little bit of volatility today is not going to change where they are at in the future. Also, Main Street Capital is a dividend aristocrat, not a dividend aristocrat. This one's a monthly paying REIT. It's a PLC. It's not a PLC. It's a business BDC, business development company. It's very close to it's a real estate investment trust, but it runs a little bit differently. And this one has $146.12 of capital in it. Cisco Systems. I took profits on this one a long time ago. I've been taking profits out of it for a while. If we go into the M1 Finance account, look at the activity here. And I don't know if I should be able to type in a specific company here, and it'll kind of bring up what all the positions here. But I've sold out of Cisco in this portfolio. It looks like just once. But I bought it while it was negative and beat up. And then when it was up 30%, I took profits here at $57.23. I saw it hitting and having some resistance and kind of losing some of their earnings. And we, in our company where I currently work at, I'm a systems engineer. I work in the infrastructure team, working with the networking and security. And our whole infrastructure changed from using Cisco products, there's firewalls, routers, switches. Now we've completely moved over and begin to buy HP Aruba and Palo Alto devices. So big $1 million loss for them there, just from our company alone. Just kind of thinking out for other companies that are no longer looking at them as well. So that is Cisco. I'm not too interested in Cisco. It will not be a position I'm really kind of interested in just putting more capital to work in there. And Pfizer. Pfizer is another pharmaceutical company, very similar with AbbVie. AbbVie and Pfizer are two of my strongest pharmaceuticals, healthcare area. And I would like to add more capital into this one, but I believe here in the short term, I really want to focus on McDonald's for sure, Main Street Capital, and I think I'll probably just kind of focus on those at this time. I don't know how long McDonald's will hold down. Main Street Capital lost also a big chunk. It was almost one of my biggest losers on the week. If we go here and scroll down to the bottom, Main Street Capital is right here, down 16.64%. I may actually add to Eaton Vance as well, but maybe I'll kind of wait on that one. I do enjoy the monthly dividend payout from Main Street Capital, so I think we'll just go into 3. Lucky number 3. I like doing 3s. So we're going to go ahead and target Main Street Capital, McDonald's, and Eaton Vance right there. It's not as a big a position. Maybe financials will continue to fall a little bit further. Financials usually speed up a little bit and fall. Oh no, it's down 3.58%. Let's go ahead and EV stock. I'll look at it here in the after hours. What did it do in the after hours? Let's go to Google and type in Eaton Vance. Well, it doesn't show me. Generally, it'll show you if it's moving up in the after hours. Your after hours, McDonald's was up. Main Street Capital was up 2.63%. What was the other one? Pfizer. Let's go look at Pfizer. Pfizer here, up 0.39%. Pfizer offers me a bigger discount than Eaton Vance. I would like to see Eaton Vance fall a little bit further. So what we're going to do is target McDonald's, Main Street Capital, and Pfizer. And these three positions are not going ex-dividend here in the upcoming week. This is McDonald's. McDonald's is not going to be going ex-dividend until May 31st. It recently went ex-dividend here in February and is paying out here on the 16th of March, but it's a little bit past their ex-dividend. So this one's not going to go ex-dividend until May. We have Main Street Capital. This one goes ex-dividend every single month. Their next ex-dividend date is on the 17th. So right around the mid-month, they go ex-dividend, and then they pay out on the very last day of the month generally. So here towards the payout. Oh, it's basically a month payout. Okay, so they go ex-dividend here midpoint this month, and then they'll pay out midpoint next month. And that kind of repeats itself. They go ex-dividend here in April, payout in May. Go ex-dividend in May, payout in June, midpoint. And then we have Pfizer here. Pfizer, 10 years of dividend growth. It's not as large, it hasn't been growing as long as AbbVie, but I still do think it has quite a bit of room to just kind of grow into the future. I don't believe they should cut their dividend during another, financial crisis. They did in the past here. We can see that they did cut it from 32 cents per share, basically cutting it in half to 16 cents per share. So this could potentially happen once again in the future. Main Street Capital, let's go ahead and take a look here at the history during the financial crisis, and they were paying, I don't think it was on a quarterly basis. So they went from paying quarterly 36 cents to monthly 12 cents. So if you multiply 12 by 3, you're going to get 36. So all they did was kind of split it up, the 36 by divided by 3, it gives you 12 cents per month per share. So they didn't really cut their dividend there during the financial crisis. They started paying out a dividend during the financial crisis and then just kind of been paying it. So this one could potentially continue to pay out during financial turmoil and craziness. They are offering a 6.66% starting yield and haven't been shown to cut their dividend during the financial issues. So Pfizer is the riskiest company here that we're invested in. McDonald's, of course, this one is a dividend aristocrat, having paid out dividends for the past 43 years during the 2000, 2008, 92, I think, crash. So they have just been paying and chugging away for quite a while here. So those are the three positions we're going to be buying here on Monday, March 2nd. So I'm going to go ahead and scroll down here towards the bottom. We're going to go ahead and select, you know what, I am, change my mind again. We're still going to be investing here, 127.56 divided by 3, 42.52, 42.52. So I'm going to look at Eaton Vance. Even though it may fall, I'm not going to be putting a whole lot of capital into this one. And it gives me a little bit more feels for it, that it's been growing and paying out dividends for the past 39 years. It does have a nice starting yield of 3.64% and a low payout ratio of 41.91. If I pick up Pfizer, Pfizer is a great company and all, but I just don't know if they will cut their dividend in half again if we go into some sort of a downturn. So they may be offering a high starting yield right now of 4.46%, but this can easily be cut to 2.2% if they find it hard to raise their earnings per share in the upcoming future, where they just need to cut it. So here I'm just going to mainly be focusing on dividend aristocrats that have grown and paid out dividends during the downturns. And if Pfizer just doesn't happen to cut their dividend in the future, that'll just be better off for me. So buy and sell, we're going to go ahead and put in 42.52, continue and confirm. And we're going to go ahead and hit done and move back to the portfolio. We're going to go ahead and target Main Street Capital, which also should be down here. Buy and sell. 42.52, and continue and confirm. And then finally we have our third and final one, which is McDonald's, which should be sort of in the middle-ish area because it's not completely down in there. Buy, sell, and $42.52. Wait, how much do we have left remaining? We have $50.49. Whoops. 42.52. I was correct. I don't know where I was looking at. I kept looking at this number, and then I got confused by this number. So there we go. Continue and confirm. So those are the three positions that we're going to be buying here on Monday morning at 7 a.m. We are going to be picking up 42.52 of Eaton Vance, Main Street Capital, and McDonald's. These are not positions I advise anybody to go out and just buy for themselves. These are positions that are in my portfolio. I'm not a financial advisor or any sorts. I'm just here, another investor myself, trying to grow and build my own portfolio up. These are positions that are red in my portfolio that I think are potential buys for the upcoming future, and will have recovery and increased dividends. So that is going to be it for today's video. Let me know in the comment section below, how do you think this week will turn out? I do believe we will either end up about flat for the week. I do think that there's going to be more media news that's going to become out there. So Monday we may start up positive, but depending on how the day kind of plays out in the rest of the week, I think news will drive this market up or down, and I do believe we'll just kind of end up flat because people just don't know what they want in the future. And with that unknown, there may not be fear, but they just won't know if the market will recover or if we will kind of fall further. And with that, I think we'll just mainly be flat for the week. So let me know in the comment section below, what do you guys think we will end up being this week, up or down? Let me know in the comment section below. Of course, if you haven't subscribed to this channel, I would really appreciate if you do hit that subscribe button below and hit the thumbs up. I always appreciate all the thumbs up I get in my videos. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.